Well, good afternoon, everybody, and a very warm welcome to everyone. And thank you very much for joining us today. My name's Jonathan Tiefel. I'm a director here at Quantum Advisory, and I'm very privileged to be joined today by Michelle Serzon of Tricks of Your Trade. Very warm welcome to her. Now, those of you that know what we do here at Quantum Advisory know that we work with hundreds of businesses across the construction sector and providing accounting and tax services. And it's been our absolute privilege to witness a lot of those businesses grow exponentially over the last few years. And of course, with growth comes increased profits, increased margins, increase in the size of projects, and unfortunately with that, the unnecessary evil of increased risk. Now, if only we had $1 for every time that somebody said to us, what should I do with this contract? What does this mean? What should I be doing here? Would be very rich. And I think all we've been able to say really is that it's worthwhile investing in good advice. Unfortunately, good advice can be very expensive. It can also be very time consuming to get hold of. And we've often thought to ourselves, well, if only somebody out there provided a service where they could give you a complete system, a complete process for managing your contracts, reviewing contracts, and being that sounding board if there are any problems, that would be the perfect solution. And I think we've found that with what Michelle's doing over at Tricks of Your Trade. So I'm about to hand over to her, but I guess firstly, why should you listen to Michelle? Well, firstly, she's had over a decade of experience in the construction industry as a site-based contracts administrator. She's also practices construction law and adjudication, and she's worked for all tiers of the contract chain for principals, builders, and subcontractors. She's really been around the industry, really knows what she's talking about. And in her own words, she's passionate about common sense contract solutions for the Aussie construction industry and leveling the playing field for fairness of contract terms, which I think is a very admirable purpose to have. So just a couple of housekeeping things before we get started, and also one very salutary warning, and that is that if we can get any questions put in the question box on your screen, that would be great, and we'll get to all of those at the end, or as many as we can. Also, if anyone doesn't have a phone nearby, please grab hold of one as we go through today's session. There will be QR codes appearing on your screen with some very valuable links and downloads that you don't want to miss, and you'll be able to scan those on your screen just as though you're checking in and out of Bunnings or Dan Murphy's or somewhere. And the warning I want to finish with before handing over with Michelle is that as Michelle goes through her presentation, I want you to think about this, and that is, for those of you that are working with top tier builders, they have somebody like Michelle or a version of Michelle sitting in that contracts administrator role, doing their bidding and managing their contracts. They may be very friendly and approachable or not. But the underlying truth is that person has one KPI at the end of the day, and that is to make sure that if things go really bad, that they're protected and you're not. And Michelle's got some very interesting stories to tell about being in that exact position. So without any further ado, I'll hand over to Michelle. Welcome.
Thank you, Jonathan. Absolute pleasure to be here. Just touching on that, there's no better truth really in that when I was a builder's CA, I could advocate for subcontractors when something was going on, and I could go back to my boss and say, look, there's a very good reason, or it's not really their fault, or we did A, B, and C wrong. But at the end of the day, I could not get an EFT. And most of these disputes catalyse at a payment claim, as you're all very aware, I'm sure. And so as a contracts administrator, it was really frustrating to know in your heart what was probably the right thing to do, but have absolutely no control of whether or not that actually happened. So I'm sort of jumping ahead of myself a little bit, but I wanted to tell you a little bit about how I came to create a business helping subcontractors get paid and manage their contracts and their disputes with their clients. And so basically, I actually started out in project management and government, and we used to get a lot of funding money coming through the door to build beautiful community facilities. So I was a really passionate contracts administrator, client side, in the very first instance in my career. And the reason I started studying law was not because of disputes. It was actually because I wanted to prosecute politicians for misuse of public funds. So I'm sure that Jonathan will find that quite amusing. But I stayed on the law path because the more involved I got in contracting and subcontracting and working for builders, I realized that we don't really actually build things when we're a contracts administrator. We manage contracts, we manage projects. And during that period, I was tutoring construction management students at university, and I just couldn't believe that there were no contract management skills taught to builders CAs or quantity surveyors throughout their degree. And so when I finished my degree, I went to work for a law firm and I was doing my work experience. And I remember being absolutely devastated that all of these clients would consistently come through the door. And by the time they got to us to get the advice, we were literally either marching them down to the insolvency department or making them pay hundreds of thousands of dollars of money into the court or into trust so that we could take them to court to try and fight their way out of their battle. And I remember saying to one of the construction lawyers at the time, there's got to be a better way. I just can't understand how I've spent all this time at uni. I sort of identify as a construction industry professional, not so much a legal professional. This is not helping people. What we're doing here, this lawyering business is not helping people. And he wholeheartedly agreed with me, but he just looked me in the eye and said, we provide legal services. We don't provide admin support. That's a different business model. And a little light bulb went in my brain and thought, well, it should be a different business model. It should be something that we could provide early on in the contract admin phase that would essentially prevent people from getting in those pickles in the first place. And almost every single time we had a client who had a business sinking problem, I could identify or reverse engineer back to the email they should have sent or what they should have written on their payment claim or that variation notice they didn't send. It was always an administrative aspect that could have been fixed that would have avoided the problem entirely. So thus Tricks of Your Trade, went out and started my own business. And in Tricks of Your Trade, we don't give legal advice. So we're not a law firm. That's why we're not priced at a law firm overhead, but we essentially provide commercial management solutions for your construction contracts so that we can help you in that period where your intuition's telling you that something's not quite right or things aren't adding up or you've got a problem job, but you don't yet need a lawyer. That, in my experience, has been the period where we can give you the most value and keep you out of trouble. So I am still a licensed project manager. I do still do work on real construction sites in a client-side project management role, but the majority of my services are targeted towards construction subcontractors in Australia. So I wanted to take you on the journey of a couple of our clients, our very early clients when we started this business. And one of our very first clients was a builder of 50 years. And he was a block layer. He could tell you off the top of his head how many bricks and blocks he had to lay per day to make a profit. So he knew his numbers. He had systems upon systems upon systems and had a very profitable business for a number of decades. But he ran into some issues when he got cancer. So he was an aging gentleman. He had a really bad bout of cancer and he didn't think he was going to survive. And his son stepped in to take over his business. Now, what inevitably happened was his son really wanted to make sure that his dad didn't have to worry about what was going to happen with their business. And so his son kicked down every single door to win every single job he possibly could, as fast as he could, so that he could maintain that revenue turnover that his dad had established over all of that time. Now, they grew too fast. They grew way too fast, and they actually got in trouble from the building regulator for exceeding their license turnover category. So they started getting fines. And so that was the first sort of inkling that this particular client thought something's not quite right here. Unfortunately, by the time he realised and was well enough to be able to reinsert himself into the business, his son had taken on so many projects and the defects that had already been built into the job that had to be now fixed and managed were already starting to come to light. So major issues there and multiple building projects. Now, inevitably what happens when there's jobs that go bad, the clients get wind of the defects and they stop paying. And so this particular builder, all of the developers that he was working for were private developers. They turned off the revenue tap and they went to lawyers to get advice about how to not pay their builder. And so that's when we came along. That's when I came along, and I inserted myself into this gentleman's business. We did $1.7 million worth of debt recovery in 6 months from developers, and then we were able to pay the subcontractors with that money that came in. Now, the unfortunate thing is it wasn't enough money. So the amount of work that this gentleman's son had bought to maintain that turnover didn't have the margin in it. He hadn't properly calculated the cost of the job, different industry pressures at the time. And so we ended up in a situation where the subcontractors couldn't be paid in full. So 4 big problems this guy had. He got sick. He didn't have systems in place for anyone else to manage his business in his absence. Nobody understood the beautiful formula that was working for him, that he knew that he had built his business around. They grew too fast, and they didn't grow in a good way with belts and braces to mitigate against defects. Didn't have any defect management systems or strategies, and then their clients stopped paying, and they had no aged receivables systems to bring them in a timely way. So not a good story for that first client. Now, the second client that we had come along was actually working for our first client. So it's a little bit of a what goes around comes around, and these big industries that we work in, the construction industry, are actually really small. I'm sure you guys can all relate. Now, this particular subcontractor was Contractor. He'd been in business for 20 years. He had a really good, strong business, but he was working for builders like the first builder that we looked at. And as with all businesses, when things start to go wrong, there are creaks and groans that give us little clues as to what's going on under the surface. So the very first thing that really went wrong with this guy was he had a personal injury claim from one of his employees. And his business structure was set up in a way that he was, as an individual, the trustee of his family trust. So when he was sued personally for that personal injury. And so that was a builder's contract that he had, and the builder sued him personally for the cost of that injury, that they had to pay the premium, they had to pay the person out. So that was where that started. Now, shortly after that, he got some advice about how to not get sued personally. And these are all good things to do, by the way. But the accountant that advised him on how to fix that structure problem that he had and to get a trustee company inserted, advised him to back pay all of his employees and didn't warn him of the big BAS bill that he would get for the entitlements that had to be back paid. So he had a snowball of a debt that he had to start managing with the ATO. Now, everybody's obvious reaction to this type of a problem in business is to grow your revenue and trade out of it. So he kicked down doors and got new contracts, and I remember at that point in time, me saying to him, please let me review your contracts, and him saying, I don't care what you say, I'm going to sign them. I need this work. And so inevitably, he sort of took the same path that the builder did, where they grew so fast that they had so many defects to manage. And he just couldn't get paid by his builders because the defects were such a bad reflection of the work that he'd done. And then his reputation started to deteriorate as well. So you can see how we have a lot of similarities with our clients. The builder had the same kind of pressures that the subcontractor had. And unfortunately, it is all a big cycle in a contract chain where if we can't handle those pressures, things go really bad. So where are these guys now? Now, this particular builder that we talked about earlier, he's actually 72 years old. He's had 3 different types of cancer, and he's still driving his ute around rectifying defects from projects that his son built when he was sick. He knows that he's got about 3 more years that he's liable under the legislation for defects, for structural defects. And the building regulator actually said to him, and his solicitors advised him that this was true, that if he passed away, that his estate would be sued for the cost of rectifying the defects in his absence. So this is pretty serious stuff. And you can imagine where you're 72, you'd really love to spend your time with your family. Instead, he's still rectifying defects. It's pretty gut-wrenching stuff. Now, the other thing to mention is he had over 30 investment properties in his personal property portfolio. But the way that his business was structured, those properties weren't protected because they were used in asset reports to help his building regulator's license portfolio so that he could have minimum financial requirements. And so he ended up having to sell all of those properties and pay subcontractors to stop his business from going into liquidation. If his business had gone into liquidation, he would have lost them anyway, and there would have been a really expensive process that everybody had to go through to get paid. So that's where that particular client is now. Now, where's the concreter? Look, a little bit of a similar situation. He got advice from his accountant to separate and put in a trustee company. What inevitably happened was, in order to get his new builder's license, he borrowed money from his family trust that became a creditor, and therefore his family home is now still in question in terms of the lawyers, and he's in a very big legal battle in terms of getting that sorted out. So look, I have to say, if you, both of these gentlemen and I, having intimately dealt with the way that their businesses came to an end, one thing I can tell you is their accountants weren't calling them to say, what's going on with these aged receivables? How come you haven't realised this money? Did you know that you've exceeded your licence category? There were none of those calls that you would expect from a really good service, from a really good accountant. So if I can give you that heads up now, that if you can start thinking about those things in terms of the service that you're offering, are the professionals that you have got in your back pocket really doing the best job that they could be to look out for you. Now this, just to get a little bit out of the doomsday prepping and into the more lighthearted stuff, this GIF is one of the favourites of mine, but I really deep down think it epitomises the situation that you're in on a day-to-day basis, where really the key to getting more revenue in your business and having a profitable business requires you to do a deal with the devil. And you never really know whether that's a good deal or not. And even as a solicitor, we have got extensive checks and balances that we go through to make sure that when we do a contract review, we are holistically looking at all of the aspects of the contract in connection with the projects that you're doing, the client that you're doing, due diligence checks and all of that. Now, any normal human being, and I don't profess to be a superhero, but as a trained legal professional, we know what to look for there, but a normal person is not expected to understand or know that. In fact, solicitors are banking on you not knowing, because when they put these contracts together, they put them together in such a way that they benefit the person who's going to buy the license for the contract. And so in Australia, we have our Australian Standard Conditions of Contract and SAI Global. I'm sure most of you are aware on this webinar who would be giving you the contract for you to sign, and whether or not you've got any argy-bargy power to get any changes in that contract. So have a little think about it, but I did want to really bring it back down to earth and let you know that I understand why you guys do this, and I can relate. If you were to take your contract to a lawyer and say, look, can I have a contract review? The way that I've typically seen these play out in the lawyer's office is that you'll have to put money in trust at least 50% of the time for the price of the contract review. So you pay in advance. Perhaps it's $2,000 to $3,000. You turn up to the contract review and you don't have a copy of the contract, but the solicitor will sit on the other side of the table and will say, you can't sign that clause, you can't sign that clause, and they'll cherry pick clauses and explain them to you. But you don't walk out of there with a guide understanding what the problem is with that contract or what you should be arguing for. And so 9 times out of 10, I see subcontractors go back to their office, sit down, try to work it out for themselves, and then attempt a dialogue with their builder that's just never going to get across the line. So in terms of a contract review, it makes little sense for you guys to do this. Now, typically lawyers will go one of two ways. They will say to you, this is too risky, you can't sign this contract. And there, down the toilet goes all of your costs of tendering the job and all of the time wasted by your staff in putting together a quote in the first place. The builder's also going to second guess whether or not they're going to talk to you on the next one. So you're narrowing the playing field in terms of who you're working for. Now, the other way they'll do it is they'll give you a list of departures, or they'll say to you, look, you can pay us additional money to have us redraft those clauses for you. Now, the redrafting process is expensive. It's not always conducive to a good contract document at the end of the day. And when you go back to your client, your prospective client, and say, here's this list of all these changes in this contract, can you just make this happen for me? You've got Buckley's chance of getting it over the line. So I know that I'm probably telling you what you already know, but I do think there is a better way. Our clients certainly utilise a better way and have much more success using our system. So I'm going to take you through it. But I want you to really understand, in knowing that in having to do a deal with the devil, if you knew every single scary thing that was in your contract, you just simply wouldn't do business. And I don't mean that to scare you out of the industry, but it's just not realistic for you to really understand the full extent of the risks that are built into construction contracts. Now, one of the things I said to Jonathan earlier is that it's actually less risky for me to be a solicitor and give legal advice than it is for me to be a builder and build buildings. I have less personal liability in the job that I do as a lawyer than you do as a builder or a subcontractor. It is just in the nature of the way that we chose our professions. But you don't have to be an expert in this stuff. In fact, there are some merits to you just blindly putting on a blindfold and letting somebody guide you through this process. Now, you might be wondering, what on earth has this got to do with a horse and a chariot? One of the things that I used to really enjoy doing when I was a teenager was reading books about ancient Egypt. And it used to fascinate me that the ancient Egyptians used to blindfold their horses when they would run them into dangerous situations. Because if they didn't, the horses would panic and they would absolutely crash before anything dangerous even happened. And so if you can think of yourself as the horse who might enjoy a blindfold in being taken through all of the deep, dark legal reasons why something could be risky, and just enjoy having a guide that can take you through this process. At the end of the day, if you didn't take any risk in your business, you wouldn't be doing business. But there are merits to choosing and picking your battles with an educated approach. So getting into the juicy educational stuff, I'll feed you the veggies with the desserts. Looking at contract management, who in this industry has not heard the phrase time, cost, quality, right? But they are forgetting the biggest problem with construction contracts is actually the liability. Now, what we've got here is we've got operational controls. We've got time, which we can control to an extent. We've got costs, which we can control, and we've got quality, which we can control. Now, liability flows from whether or not we control time, cost, and quality. So you can bring it back to those basics and really see that these are tangible things that we can manage. And if I can give you guys a little bit of encouragement, 90% of what you need to do under the contract, you already know. It's actually already in your mind about the job, about the buildability, about whether your business can handle it. All of the really scary things that you're likely to encounter, you probably already deep down know are going to be a problem. So trust your commercial acumen, trust your internal compass when it comes to things like that. Now, when it comes to liability, when we look at this from a 80-20 rule perspective, just to cover off on, to make sure everyone understands what I'm talking about there, there's a principle called the Pareto Principle. I think it was an Italian gentleman who noticed that whatever you did in life, there was an 80-20 rule. And so if you thought about where you walk on your carpet, 20% of your carpet gets more worn out because 80% of your walking on that carpet gets done in that line on 20% of that carpet. So whatever you do 80% of the time will give you 20% of the results. Now, when you look at time, cost, quality, and liability, 80% of the money that you will have to come up with if you get sued will come from a liability under the contract, but you won't see the liability in the terms of the contract. It's not right there in plain English for you to read. It's actually something for you to infer from or understand from reading the contract in conjunction with all of the parameters and all of the context that you've got going on. So what you actually really need is a guide to help you understand which battles to pick, what to actually negotiate on, and what's going to get you an outcome. Now, I'll give you an example. A lot of the contracts at the moment have got, well, even the Australian standard contracts have got what's called a cross-contract liability clause. clause. And so the clause essentially means that if you're working for ABC Builder on 100 different jobs and you make a mistake on job number 1, he's allowed to sue you under contract 59 for the mistake that you made on job number 1. Now, that sounds like a pretty nasty type of clause that you would have in your contract, but if you're only doing one job for this builder, why would you worry about it? So you really need to take into context, how scary is this clause in conjunction with the actual circumstances at hand? And it might help you to understand that scary clauses in the contracts don't make a dispute. Circumstances make a dispute. And then when those circumstances arise, everybody runs back, pulls the contract out of the drawer, and then tries to figure out what dominoes they've got to stack up in their camp to try to flick them over the fence to you in your camp. So something to ponder on there. So I've got this hierarchy of contract risk controls. Now, I created this from the hierarchy of controls in safety, and I'm sure that most of you have heard elimination, substitution, engineering, I think they call it, operational controls. Now, when it comes to contract clauses, you can apply this and quite successfully get your way through a contract review. Now, the very best way to eliminate risk in a contract is to eliminate it entirely, but that requires you to cross it out. You've got to either cross out the clause or you've got to not do the job. And we know that we want to be in business, we want to be doing what we're doing, so we need to take the work. So if you can move down and substitute or water down your clause, this can be very effective if your builder or your client is open to negotiating terms with you. If they're not open to negotiating terms, you're not going to get any substitutions. The other thing is there are certain clauses in the contract where you could shoot yourself in the foot if you start substituting. So a good example is variation clauses. We can't cross it out. We might have, let's say we want to be able to decline to do a variation because we know that in the defects liability period, we're going to be moving back to our hometown. We're not going to be available to do variation work. So you might think I'll just cross out this clause that requires me to comply with the direction to do a variation. Well, you actually need the direction to get paid for normal variations. So substituting or watering down the clause might not actually get you there. Now, where we start to have to invest time is in our contract admin, and we need to invest a certain amount of skill or a systematic approach. Now, in terms of administering your way around the contract, you can actually administer your way around most of the risk, because the way that contract law works is that you actually have to have a mechanism inside a contract to be able to adjust time or adjust cost or adjust quality or vary the terms of the contract. And if the contract doesn't have the mechanism, we end up in no man's land, which is what they call common law, as opposed to contract law. So if you think about a street football game versus a game of football in a club where they're adhering to the rules, the club is the contract because they've got the rules. The street park football game, there's no rules. It just depends on which suburb that you live in as to how hard you're going to be hit. So keep in mind that you can administer your way around a contract, even if you don't negotiate successfully on all of the terms that you'd like to. But once we start to get into this orange section, we are getting into what's called the reactive operational controls. So all of the blues are proactive things that we can do that don't cost a lot, but might be a little bit time heavy, but not very expensive at all. But once we start to get into operational controls, we have to actually perform. So we're stuck with the clauses in the contract that we signed up to, stuck with the circumstances. The only way that we can get out of the situation is to jump through hoops and do what they're asking us to do. Now, this is not always possible, and this is where we can end up being in breach of contract. Now, this is the one that I see most of the time when I have somebody who's talking to us about being a member of the Subbies Toolbox or talking to us about using our services. They'll say, no, I don't want to ruin the relationship with my builder. I'm relying on those relationships, the relationship. And like I said, I take the point that you guys need ongoing streams of work and that revenue is a real issue for you. But relationships are only as good as the person you've got them with. Relationships can also detract you from what's really going on. So I'll give you an example of this. We recently had a client who was working on a defence project, big tier 1 builder. It's a matter of national security, the construction work. And they had a really good relationship with the contracts administrator. They were talking to her about a delay claim. They'd been on site and not been able to do any work for almost a year. So serious delay costs afoot. And just as they were about to negotiate the claim, she got a promotion. And nobody thought that would happen. Everyone thought, well, this is our person. She's agreed this with us. But instead of being the site-based CA, she became the project manager who's actually responsible for the budget and responsible to the commercial manager and the contracts manager and accountable in terms of whether or not she had administered the contract down the chain. Now, it wasn't so straightforward in terms of getting what she wanted. The other thing I will say to you, and I'm going to ask you to really stick your hand on your heart and say this out loud, is if you can stick your hand on your heart and say that I have got a relationship with my client, he knows my name, he has my phone number, and if I call that number, he'll pick up an answer. If that's the actual truth, hand on heart, then congratulations, you've got a contract, you've got a relationship with the person that you've got a contract with. If that's not the case, you have got a relationship with a staffer, and the staffer has a boss, can't get you an EOT, and actually has competing interests to yours because they're accountable up the chain. Now, if your relationship falls over with whoever it is you've got the relationship with, you've got to rely on the law. And one of the most common ways I see this happen is where the builder or the client just doesn't have the money to pay you. It doesn't matter who you've got the relationship with, the money's not there. So it brings me back to our client, the concreter, and I can really bang on about relationships on and on and on, but I want to let you guys hear it from his own words. Earlier this year, I did a podcast with this gentleman. He was brave enough to get on there and talk about how his business went into liquidation, how it all went wrong and what he would do differently. So I'm going to let you listen to the little recording that I've got for you about that.
When we first started working together years and years ago, I remember you saying to me, Michelle, I don't care what we do, just don't ruin my relationships with my builders. What do you think about those relationships? Do you think they were real?
Not at all. They're completely non-existent today. Yeah, I definitely put too much emphasis on that in the beginning. Obviously, when you build a business, you want it to all repeat clients and people you get along with and you do a good job for them. But it gets to a certain stage where it's no longer the quality of your work, or you could have worked for the same builder for years and things aren't going well, they turn on you.
Any of the builders that you've worked for, none of their staff have contacted you to see how you're going?
No, definitely not. No, I've tried, since then I've even tried to contact a few when it comes to what I did next, but it was all just, I was a bit taboo. Don't talk to him now.
Yeah, right. Now, I remember you telling me when your company went into liquidation, you told me that you went and you personally told each of your customers what was going to happen before it happened. What happened? How was it received when you went to front up and tell them that you were going to put your company into liquidation?
Look, there was obviously a couple that were like, sorry to hear that sort of thing, but what I did find was literally within half an hour, the phone started ringing and all they cared about was their project. So who's going to finish this project? Oh, what's happening next week? Can I have the number of your supervisors? Who are they going to work for after this? We need to get this project finished. And, without going into too many specifics, we had gear on site, so we were suddenly banned from picking up. It just got really ugly like that afternoon.
So it's actually really hard for me to still listen to that recording because I played a part in that guy not getting paid when I was working for that builder. There were a number of his builders who went into liquidation, and all of the relationships that he had built over 20 years of business dissolved in 30 minutes. So I'm just going to leave that there. I'm not going to keep going on about relationships, but you know how I feel about it. So here's the thing. If you have been blindly signing your contracts or you don't have any systems in place for any kind of contract risk or risk in terms of your construction business, I'm sorry, but you're really playing kamikaze pilot planes, because you don't know, at any point something could crop up you wouldn't be aware. Every single time you entertain a contract or you embark on a new job, you don't know if your business is going to be there at the end. And if you have got no measure or approach in terms of the way that you manage risk under your construction business, it's the same thing as being a kamikaze pilot. So I want you to think about, when we go through this next section of the presentation, how many of these things have you got under control, and whether you could do with a guide. So in terms of time, look, these are the things that I'm actually reading from the ultimate guide that I'm going to give you the QR code for in a second to download. But these are the things that we check on when we go through your construction contract before you sign it. So do the dates on the contract reflect the state of affairs? Have you got separable portions? Is the date for completion correct? Or is it in the past? Are you trying to backdate the contract because you've already started work on site? Is the construction program current, or is it the one from tender that ended 3 months ago? What's the rate for liquidated damages? Is it more than 1% of your contract sum? How many days could you actually go and get liquidated damages applied to you before your contract sum was exceeded? Do you have insurance for liquidated damages? Are we entitled to delay costs? And if we are we also entitled to disruption costs? And then how are those things calculated under this contract? So how do we know how to give a notice of delay and an extension of time? Have we set everything in our template that will comply with every single construction project and contracts that we've signed up to? Or have we got one cookie cutter template that doesn't really cut the mustard? How do we trigger practical completion? Is practical completion when we're complete, or is it when the client's complete? How long is our defects liability period? What's the definition of a working day? What are the time bars, and how long do I have to actually give these notices under the contract? How long do we have to notify about a variation, or if we're given a direction that we think is a variation but the builder doesn't agree? What is the duration or term of our insurance policies that we hold, and what does the contract require us to have? And how long are we liable for non-defect related obligations under the contract? So even after the defects liability period expires, how long can I be sued for? Now, in terms of cost, do we have a contract that's fixed price, a bill of quantities, or a schedule of rates? Did the important aspects of our quote and the exclusions from our quote actually get captured in the contract scope of work? What is our margin on variations? How do we actually calculate that? Does that margin include prelims and overheads? Am I entitled to delay costs, and how are they valued? Again, this is a cost management thing. Are there any items in my scope that I would not normally do? Do I know how much they cost to deliver? Do I own those materials until the client pays me? Are we mitigating against rework by managing our quality? So have we actually budgeted the cost of doing business for the entire duration that we are liable under this contract? What recourse do I have if I'm not paid? Can I suspend work? What happens if the cost of construction escalates while I'm on the job? Am I stuck under contract? Now, in terms of quality, I'm sure you've all seen this diagram. It's been in circulation for a little while. How good are your site records and your photos? Do you have time and date stamp on your photos that you're taking on site? How good are your inspection test plans? Do you have software? Are they signed by the client's representative? What standard of finish is the contract holding us to? Is that over and above the Australian standard for your trade, or a grade 5 finish that actually is impossible to achieve and costs a bucket to try? Are we making any assumptions about industry standards? Are we recording site instructions? Are we working off the same drawings the builder is, and how do we prove it if we are? Have the drawings been updated if changes have been directed? Do we have subbies? And if we do we have a written contract with them? Does that contract reflect the terms of the client's contract? Who's responsible for design? Do our subbies and suppliers have insurance? Does our contract require them to have insurance? Who is liable if the drawings result in us building something that does not comply with the building code? Now, liability, this is the real kicker. Have we reviewed our contracts every single time? Do we have a system? Who are we liable to under this contract? So who are the actual parties to the contract? And now just a hot tip on that one, most contracts at the moment have got a deed of guarantee and indemnity in them. And if you come across that document, you might notice that there's not just you and the builder named as the parties of that deed. Now, deeds are pretty powerful instruments and they can create a contract all on their own, just with that separate little section of the contract. And so if you have got a deed of guarantee and indemnity in your contract and it names your client's client or the builder's client or the principal, you're essentially entering into what's called a tripartite deed, three-party deed. And therefore, if the builder disappears or if the principal is minded to, they can actually sue you separately and distinctly from the builder. So look out for that one. What is the nature of the contract? Are we designing? Again, is it construct only? Is our client able to set off any money under our contract? And what a set off means is, can they just take it off our payment claim or back charge us? Are we liable for consequential loss? Are we liable for pure economic loss? Are we insured for all of our obligations under the contract? So not just contract works, not just public liability, not just work cover, not just in professional indemnity. Are you insured for liquidated damages, pure economic loss, consequential loss, all of those things? Have we sought advice about our business structure? So when we are entering into this contract that has a director's guarantee written into it, who's becoming liable for any default under this contract? Is it the director personally or is it just the company? And if it is the director, has that director sought structure advice in that regard? And is there a form of unconditional undertaking? Now, another hot tip is the form of unconditional undertaking that is in the Australian Standard Conditions of Contract has been heavily amended by lawyers to basically allow them to use the undertaking for any default under the contract. So form of unconditional undertaking used to be a bank guarantee. It's basically a bank guarantee about retention, but it has been so heavily amended that now the builder is able to use that bank guarantee for any other claim under the contract, which could be for liquidated damages. It could be because you were required under the contract to have an ISO 45001 system and you didn't, and they got audited by the federal government because they were a defence job, and lo and behold, they set that off under your contract. They can use your bank guarantee if they don't have enough to short pay you to pay the cost. So pretty heavy stuff. And this is why I wanted to demonstrate to you how important it is that you need a guide. You can't practically remember all of that stuff on the carousel going around and around and around in your head with all of the other things that you've got going on your jobs. You really just need a systematic approach. So this is where I want you to grab your phone, use the QR code and download the ultimate guide to reviewing your contracts with a checklist before you sign up to them. Now, I'm going to leave it on this slide for a second just to make sure that you all have time to do that, just in case somebody's running off. But I just really want to hit home again. You do have a choice about this stuff. You can be a warhorse. You might be blindfolded at the start and not know what you're doing, but with a guide, you'll be guided through all of the dangerous parts in your contract to make sure that you have something that's cohesive, something that's workable for your business. You'll negotiate on terms that actually matter for your business based on the circumstances that you've got at hand. Or you can be a kamikaze pilot. I'll leave it up to you. Now, I just want to give you guys an indication of how easy it is to use the guide to have some success. So the ultimate guide that I've given you in contract risk is an all-encompassing guide to how and what we should do to manage commercial construction risk across our jobs. But in our Subbies Toolbox, we have a comprehensive contract review checklist. And one of our members used this checklist earlier last year, and he actually came across a deed that required him to warranty the work for 5 years after practical completion of the work. And so what they were talking about in the deed was, even for aesthetic defects or any kind of, there was a particular clause in the deed that said, any request from the principal about a defect. So the bar was ridiculously high in terms of like a grade 5 finish. Now this guy is a plasterer. He sat down and he worked this out, right? He crossed out 10 years for plasterboard and drywall petitions. It's actually 6 years, 6 months in Queensland for structural defects, 12 months for non-structural. He wrote it there, and that is the builder's signature. When he sent it back to the builder's office, the builder marked up the changes. And then a year and a half down the track, when the builder sent a Word version of the deed and asked him to sign it, he went back to his file, pulled out his contract review, and was able to actually show the builder that he had done these markups. And that subcontractor very quickly resolved it, went back and said to the builder, that's your signature. We agreed to this. I'll sign this version of the deed with the markups. That's it. No lawyers involved, didn't cost him a cent. In fact, it saved him 5 years of extra toing and froing with the principal. Now, in terms of bigger fish, what could we have possibly done to have saved this builder's business had we come along earlier? Look, what he really needed was probably much better advice in terms of his business structure from the outset, because all of the investment properties that he purchased over a lifetime of being in business was sitting in an entity that could be got at from the building regulator. So as soon as he knew that, there is quite a hefty cost in terms of fixing that up. But his son had no idea how to grow the business that quickly. In fact, when he was tendering, he was just trying to marry up with the revenue turnover that his dad had achieved previously, and he just ended up overshooting the mark. Now, if they had started debt recovering before I came along, they wouldn't have had cash flow problems. The cash flow problems just absolutely remained their relationships with their subcontractors who had to wait in the wings for payment. They didn't have written contracts with a lot of their subbies. In fact, when he had built the business so quickly, he didn't have very good staff, and they didn't do very much right at all, to be honest. So contract administration was a big problem. Cost reporting procedures. Now, what happened with these contracts administrators, and I know I promised not to talk about relationships again, but this is a perfect example of how a staffer can actually try to keep you happy in your camp as the subby and hide things from their boss that will come back to bite them in the bum. But this particular builder, his contracts administrator, when he would get a variation that he hadn't told his boss about, he would release the exact value of the variation in retention. So when the subcontractor received the money in the bank, it looked like they got paid in full. But in fact, it wasn't until a year later, at the end of the defects liability period, that he was able to realise, I've had some of my retention released and I didn't get paid for that variation at all. And so it was a major problem for the subcontractors, but you can imagine the absolute shock for this builder 12 months down the track to find out that they'd partially released retention, but they still owed money on variations. Absolute problem. Quality management procedures. Now, what could have saved this guy's business? Look, I'll call it early, but trade credit insurance. He had 5 builders go broke. He also got stung on a preference payment where essentially one of the builders who had entered into a payment plan with him came onto the radar of the liquidator, and the liquidator came back to him and said, look, you knew this guy was going broke. You got a payment plan with him. That's evidence. We want you to pay back everything he paid you under the payment plan. It was more than 6 figures. A trade credit insurance policy would have covered him not only for the builder going broke, but also for the preference payments had he had that underwriting in his policy. So I don't sell that stuff, guys, but certainly a fan. Early accounts receivable intervention. This guy with his cash flow, with his BAS problem, was a major issue, and being short paid consistently again and again and again over defects was a huge problem. Now, safe work practices, another little bit of information to really hit home for you. The injury that took place was actually my job. I was working for the builder. It was my construction project. I was the contracts administrator. I was on site that day that the injury happened. So these things are all very intertwined, but the builder, and can I just qualify, I didn't have any part in him actually being sued by the builder, but the builder did go and sue him personally for all of the costs attributable for that injury. Now, due diligence on his builder. there were quite a few builders he worked for that we knew were going broke, and we knew because they were selling fleet. There were so many indications it wasn't funny. So I know that this all sounds way too hard when you're thinking about how am I going to put all this together? And honestly, it took me over 6 months to put the subbies toolbox together, but I have created an end-to-end contract management and security of payment system that will support your business needs. So you don't have to be an expert in all of these facets of your business. In fact, it's absolutely perfect if you've got a team of people that you can have sit down and go through the subbies toolbox without support and learn the end-to-end contract management system that you can implement in your business. Now, we have state-specific security of payment toolboxes and a contract review toolbox. Every month we do a contract review workshop. So you'll actually have me sitting in a Zoom room with you, with your contracts, and we can review them together. You can also come along to our monthly payment claim and payment schedule workshop. And 2 days a week, I just sit on Zoom and answer your questions. So if you don't think that's a valuable service to have in your business, I'm not sure how much more I can convince you that this would be something that will save you cash in the long run. So I've got a QR code there. Subbies Toolbox membership is open at the moment. If you would like to join us, we would absolutely love to have you. Alternatively, if you're not quite ready and you just want to have a little bit more to do with us before you commit, I've got a podcast, and every week I talk about topics that would be of interest to you in your construction business. So I would dearly love to have you listen, give me a rating, or ask a question in the show notes so that I can answer it for the next episode. I'm making myself available after this webinar for 15-minute free consultations or chats, or just a scoping session in terms of whether or not you think the subbies toolbox is right for you. Or if you've got a particular problem that you want to talk to me about, slide into a call with me. You can book me by using this QR code here. So I might throw to you, Jonathan, if you are able to go through the chat. We were going to go through a bit of a Q&A session.
Yeah, thank you, Michelle. And wow, that was heavy going at times.
Apologies for that.
That's a lot to get through. No, it's excellent. And for those that may not be able to scan the QR code or watching this on their phone, I've just launched a quick poll there. So so rush in if you'd like Michelle to reach out to you and book a time. It'd be valuable, no doubt. And knowing how passionate Michelle is about it, I'm going to throw it out there that I question whether you'll be off the phone in 15 minutes. But anyway, I'll leave that up to her time management ability. But yeah, don't miss the opportunity. It's obviously pretty crazy stuff. Some of the stuff you've covered off on there, and last thing we want to see is any of our clients get caught. So yes, we've got some very, very good questions coming through, Michelle. And if you'd be kind enough to stick around for a bit and answer some of these,
I'd love to.
Some of them are absolutely brilliant. So we'll get started. Okay, so the first one, and this is coming quite a few times, and I'm just going to paraphrase here because there's multiple sort of variations of this question, but it's, what is the best course of action if we're in breach of a contract due to public health orders? So this has been gone with COVID. So if I can't get on site, can't get supply, et cetera, what's your advice there?
Yeah, so the first thing I would say is you're probably not actually in breach. So if you have a look at your construction contract, there will always be a clause in there that says that you must comply with legislative authorities or statutory requirements. And so any kind of change in a government direction that results in you having to comply with special orders, it's likely to be a right for a variation, or at least an extension of time. So where you might be looking at your contract and thinking, oh, I'm in breach, it's very unlikely that you're in breach of contract. It's probably more likely that there could be a way that you could benefit from giving a notice or two under your contract to protect yourself. The most likely way that you could get into a pickle about a statutory direction that prevents you from getting to site is if you don't give a notice of delay and don't claim an extension of time, and inevitably your date for practical completion will pass you by and you could be liable for liquidated damages. So definitely have a look at your clause in your contract for legislative requirements or compliance with statutory authorities. Have a look at your qualifying causes of delay and claim an extension of time.
Excellent. Okay. And we've got another one here, and this has popped up a couple of times before this webinar as well. It's something we've been spoken to about a few times, and that is, what should I do if a contract, usually a government contract, forces the appointment of a particular contact that I don't want, i.e. a union representative?
Okay, so here's the thing. These are the types of things that you probably needed to work out when you did your contract review right at the very beginning. So when you sign up to terms that forces the appointment of somebody that you're not happy with, unfortunately, you might be stuck with what you've got. If there is a really good reason that you can argue that that person is not objective, and I would say that potentially you could argue that a union representative is not objective, what you would essentially do is give a notice of dispute under the contract. And so most contracts will have a provision that requires you to give a notice of dispute within so long of finding out that you're not happy about something. And so you give a notice of dispute saying what you're unhappy with and why, and then force the parties to meet to talk about it. So it's a really good way to bring things to a head and let your client know that you're actually using your contract, you understand what you're doing.
That's good. I'm moving this one up a bit because I really like it. That is, broadly, what are my options if I've learned today that I'm in a contract that could go very bad but hasn't yet?
Okay, yes. So this is where you need to have absolutely watertight contract administration. So if you have got an indication that your job is going to go south or that the builder's in trouble, there's a few things that we do. We make sure that we quarantine as much money as possible in our bank account. And I know that that sounds like magic fairy dust type stuff, but the way that you would do it is that you would front load your payment claims a little bit so that you could get a little bit ahead in your cash flow, making sure that you have compliant security of payment claims so that if you are not paid, you can suspend work or you can essentially take an adjudication and get paid. Now, the other thing you need to do is to make sure that you are lily white in terms of your performance under the contract and any notices that you might have been required to give. So that's definitely where you would approach it, is by actually leveling up your own performance under the contract to make sure that you are mitigating. The other thing is, when these things go bad and your client inevitably looks to all of the subcontractors on site to pick a fight with one of them basically and short pay them, you're not going to take a battle with you if you've got all of your admin lined up.
Sure, that's excellent. Okay, there's another very good one here, and that is, Michelle, what is the one clause you would make sure is in every contract?
The one clause that I would make sure is in every contract. Well, that's a really good question. Well, hot topic at the moment is being unable to decline to do a variation is a real problem. So if you are unable to decline to carry out a variation, or you must comply with the directions such that you can't decline to do a variation, I would be doing that, because the problem that we have in this economy is that you can actually get stuck under contract where you might get to the end of the job and you're almost complete, and then all of a sudden they direct a really large variation and you're stuck and locked into the rates under your contract that you might have priced a year and a half ago, pre-COVID price increases. And that would be a real problem for you. If I'm allowed to have two, you'd definitely be making sure that you can have an extension of time for COVID related delays. And I'd be quite broad in terms of writing that into your contract and saying any delay or disruption as a result of COVID. But essentially you're just doubling down on whether or not you can get an extension of time because of a lack of ability to get resources and things like that. So definitely good ones to have.
Sure, that's excellent. No, we'll let you have two. I think they'd both be very helpful. So. Okay, do you know a company who can insure you against liquidated damages? Is there anyone that you can point?
You need to get an underwriting from your broker. So when you talk to your insurance broker about your insurance policy, typically it'll be and please caveat guys, I'm not an insurance broker. I'm probably one of those really boring people who has to try and interpret insurance policies, but you will typically, if you have a broad form insurance policy, your broker will be able to tell you if you can get insurance for that. I have seen insurance policies that will cover you for consequential loss, but not economic loss. The other thing that I would really recommend that you do, which is free, is when you go to sign a contract, send it to your broker and get them to get the insurer to confirm that you are covered for all of your insurable obligations under the contract. Puts the onus on them to go through your contract and work out what you need insurance for. And then if they come back and say to you, yes, your contract works policy covers you for everything under that contract, it's a lot better and something that you can rely on than if I was to tell you that it does, or even if you were to try and work it out for yourself. So definitely do that.
That's brilliant. Brilliant advice. Okay, another one. If I mark up a contract and sign it before I send it to the principal contractor for their initial, am I technically executing the contract?
No, so they will need to countersign. So what you've given them is a counter offer. So if you get a contract and you sign it unamended and you send it back, you would have accepted it. But because you made changes, you're essentially giving them a counter offer of terms. So the hot tip for everyone watching with this is never, 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 never start work on site without having that countersigned contract back in your inbox and saved somewhere safe. Because I have actually seen this happen recently where a subby has marked up a contract heavily. They've been directed to start work on site. There was quite an expensive item that had been crossed out that was in contention. And all of a sudden, we got pistols at dawn between the builder and the subby about which version of the contract applied. We've also had it one step worse where the builder, 6 months into the job, grabbed the subby's marked up contract out of his inbox, made further markups, signed it, and then uploaded it to Procore, where everybody knows it's plastered in the sky to be gospel now, and then tried to rely on these additional things that that person had put into Procore 6 months after the guy had started on site. So you can eliminate this argy-bargy just by saying, I'm not starting until I get it back. So just always do that.
That's good. Okay, another one. We find that if we refuse to sign the contract as is or try to make too many changes, the next guy will sign it without a question. How can we win work and make the needed changes? Most builders accept a cap on LDs. Yeah,
absolutely. So you as a business should decide on what your contract not negotiables are. And when you get really good at reviewing your contracts, you'll be able to horse trade. So the way to do it is to stack the deck and send 5 changes to your builder, but have 2 or 3 that you're willing to just basically give up on, and then but double down on the ones that are important to you. So that's one way to do it. The other thing I would say is if the next guy is willing to sign up to the contract and you can see plain as day how risky that contract is, let your competitor take the risk. It could be that you don't do as much work in this calendar year. Could be that you essentially start looking for work in other places. I'll give you an example. We actually had an electrician for one of the builders that I used to work for. He asked the builder for some references. It was the first time that he was going to work for them. And the builder laughed in his face, told him to get stuffed, and he gave the job to the next electrician. The builder didn't pay the electrician went broke. But in the meantime, the first electrician who asked for the references, he had no choice but to look elsewhere for more work. And he actually got some really great clients in that 6-month period that he still works for now. He's actually doubled the size of his business. He's opened another branch and he's actually really enjoying the work that he did. So it was a sliding doors moment, and it just, the gut instinct for him was, can you give me some references? You're asking me for references. Can you give me some from you? And the builder said, no. And it was the best thing that could have happened. So I think just try and take a common sense approach to it and trust your gut instinct on it. But if the next guy is willing to sign up, sometimes it can be that you can just let them sign up and they might not be your competitor for much longer.
Okay, so another one here. What's the advice about price rise and fall in a contract given the ongoing increases?
Yeah, so the thing about this is if you're not entitled to escalation costs under your contract. So keep in mind, rise and fall and escalation are 2 separate and distinct things. So rise and fall typically talks about CPI. So if you were looking at the price of steel, CPI lags, and so therefore it's not going to be of any help to you. It's not going to get you any more money under a rise and fall provision. So even if you do have a rise and fall ability in your contract, it might actually be going against you. On the flip side, if you're entitled to escalation costs, that's where you're going to be looking at the escalation cost of materials. Now, we talked earlier about having to comply with statutory authorities and being entitled to delays for that. Now, there could be a little bit of a backdoor, and it would be subject to the actual provisions in your contract. If you were entitled to a variation for compliance with the statutory authority, or if you were entitled to, and an extension of time for compliance with the statutory authority, what you would do is you would claim an extension of time, and then you would put in a variation for essentially the delay in being able to order materials at the earlier amount. Now, the problem that you're going to have is if you have got a fixed price contract that doesn't allow for delay costs, doesn't allow for escalation costs, and you're not entitled to a variation for any kind of change in statutory authority, then you could find that you're stuck in terms of having to deliver on that.
Very good. Okay. Can principal contractors delegate safety risk under contracts?
No. So principal contractors are strictly liable. So they're not the only ones that are liable, but they cannot contract out of their liability. And they can't get insurance for their liability either. And if they did that, that would be essentially trading out of it or contracting out of it. So it's important to know.
Sure.
But you could be also liable as well. So
okay. So another one here, where and when can a force majeure be enforced? Can it be used with supply chain material shortages given the circumstance beyond your control?
No. So force majeure is so narrowly construed these days that it's probably not going to apply to your job. So the changes in, keep in mind that the changes in the cost of building materials aren't because of COVID. COVID has caused a phenomena in the country that has essentially seen people buying more houses, building more houses, and building more stuff. So going to Bunnings on the weekends and things like that. The reason that we have a shortage of materials is because of the housing grants. And so it's actually government stimulation that has caused the shortage of materials. So it's not an act of God. It's not something that's entirely it is outside of our control, but unfortunately it was something that the government's really triggered. So definitely, and it was actually the legal minds of the world did initially go to the force majeure sort of part of the book when they saw what was happening with COVID, and they thought, oh, look, this has got to be a way that we can get some kind of something special. But everybody quickly realised that it was going to be about how the government managed COVID as opposed to the pandemic itself.
Okay.
So it's compliance with legislative authorities.
Yep. Okay. Any tips on withdrawing from a contract if you are faced with material shortages outside your control, i.e. placed on allocation from supplier?
It's going to, basically it's going to all come down to what your contract terms are, whether or not you've got a right to terminate. Very few contracts give subcontractors a right to terminate at the moment. There are a number of commercial ways that you can advance a dialogue with your client, particularly if you think that your business won't withstand the additional financial stresses. But yeah, unfortunately, in order to answer that, getting out of your contract requires the other party to be in substantial breach, which is subjective, which you have to notify for, and there's a whole raft of legal tick boxes that you need to do in terms of terminating a contract properly. If you try and terminate a contract and you miss the mark, you will quickly find yourself in breach of contract, and then you could be sued. So that is something that if you need a particular contract looked at, you book a consultation through our website or talk to your solicitor about it as well.
Sure. Okay, now Ben's asked a really good one, which I could imagine is a bit of a recurring theme. If a subcontractor doesn't sign your contract, but has received it and has started on the work, does this mean they've agreed to your terms? Is this good enough, or should we still push for the contract to be signed?
You should still push for the contract to be signed, but you can't withhold payment because they haven't signed it or returned it. So just as risky as it is for a subby to start work on site without a signed contract, it's just as risky for the builder. And what you essentially, yes, they have signed up to your terms. So the terms on the table at the moment, somebody commences work, will typically be the terms on the table unless they have been expressly rejected. But this can get very wishy-washy very quickly. We had quite a complicated adjudication last year where the subcontractor did exactly this. He started work on site, the builder sent the contract, but he didn't sign it. And then the subby didn't agree with the subcontract price. And he was like, this is nearly 200 grand less than my quote. This can't include this, and this. And so when he did up his payment claim, he adopted the contract price that the builder had sent. But in adjudication, the adjudicator actually found that even though he had been emailed a copy of the contract, the terms on the table the day that he started work were his quote, and there was a scope in terms of the tender documents, and the contract remained unsigned. So you really don't want to find yourself in that position, but the subcontractor will have rights to debt recover for the work that they've carried out under security of payment legislation, regardless of whether or not they've signed the contract.
Sure. Okay. What if they won't cap LDs, as they say they have back-to-back? It just reads here, say they have back-to-back with their client contract.
Yeah, that makes sense to me.
Yep.
So
what safety measures can we put in the contract so we are somewhat covered?
Yeah, so the terms that you can sign up to when you sign the contract will be the lasting terms. So you need to negotiate down the liquidated damages or request that they're capped. Now, if they say, look, we can't negotiate on it, this is the perfect opportunity for you to say, look, all right, we will accept liquidated damages at that god-awful rate per day, but you guys need to expect that we are going to rain notices of delay on you and claim every single extension of time. And if you call us contractual, I'm going to remind you that you guys were the ones who would not negotiate contract terms with me today. And that is how you set the scene for essentially watertight contract administration. Your modus operandi will be to mitigate against those LDs. And every single time they say, stop sending me notices of delay, just say to them, you guys wouldn't cross it out or you wouldn't cap it. And if it becomes a real point of contention, the other thing I like to say to them is, you guys should be happy that we do this because it means that I'm not going to go broke on your job because the builder down the road is taking LDs from me. So that's how I would approach it.
That's excellent. Thank you. Okay, so getting back to basics a bit here, can you explain how a bank guarantee works for a subcontractor, and is it a good option to pursue?
Yeah, great question. So only in certain states can you debt recover a bank guarantee using adjudication. In other states, you have to go to court to get your bank guarantee back. It can become a real problem. So if a subcontractor is going to give a bank guarantee to a builder for retention, the first thing I would say is make sure that the form of unconditional undertaking is only for defects. So it's only for a set-off relating to defects. Then you want to go, I think it's your bank will give you a bank guarantee, and you'll have to probably talk to Jonathan about jumping through some hoops for some reports. You'll get two documents. You'll get one for 2.5% of your retention and another one for 2.5% of your retention. The first one will be released at practical completion. The second one will be released at the end of the defects liability period. So what I would say is, if you're going to use a bank guarantee, I wouldn't bother with anything if either of the bank guarantees is going to be for less than $30,000 Australian currency, because the cost of going to court to get a direction from the court to give you back that piece of paper is going to cost you more than the piece of paper itself. But it'll be a loose end from your credit perspective that you can't let just stay out in circulation. So the first client that I talked about, the builder in this presentation, he actually had a number of bank guarantees that developers just would not give back to him. And a lot of them were $15,000, $30,000, one was for $50,000. We used to go to these meetings and try to talk about defects and go through this list. And my one objective at these meetings wasn't to get us an agreement to be paid. It was just to get the piece of paper off the body corporate manager, who would walk around with it on a clipboard under his arm, because he knew that that was his leverage. So bank guarantees can be great, but they can also be a real headache. So definitely something to talk to your accountant about. And also, if you have a specific project that it's asking for it, you need to make sure that the terms of the unconditional undertaking are something that your bank will accept, and also are just for defects, not for other things like liquidated damages and things like that.
That's excellent. Thanks, Michelle. We're on to our lucky last one, and then we'll let people get going and jump into the Subbies Toolbox and have a play. Okay, so what weight do statements of financial performance / financial records give when a contractor is considering subbies? So I'm assuming this is talking about when you're requested to provide some proof of financial performance. Should I prepare this statement myself?
Okay, don't prepare it yourself. Look, you can try if you want to, but you're very likely to give something to a potential client that you may not want them to have at some point in the future. So statement of financial capacity or statement of financial position is something that you should get your accountant to do. In fact, I would be surprised if any potential client accepted one that you did yourself, because they need to be prepared by an objective third party. Now, in terms of this type of stuff, your business structure is going to be the be all and end all here, because if you have got, like what I've got is a family trust, and at the end of each financial year, we empty the trust, because if you have money in it, it becomes a problem. So what you need to essentially do is prove that you're making a profit, but your paperwork doesn't say that. So you could end up in a situation where your client says, well, you don't have any cash. And the only way to prove that you do is to tell them about your secret structure where you keep all your important assets. Now, one of the other things to think about is that if you're going to give them all of the juicy information about your assets, that can be a little bit of a carrot in terms of whether or not they decide to sue you. So it could be that they end up in a litigation themselves, or something changes in terms of your client's business situation. And the only way that they can survive is to call on claims of other parties. If they were to sit down and do a triage of who their contractors are that they can sue, or at least get some money out of on a settlement basis, by all means, they will take that into consideration. So if you can get away with it, I would suggest that you shouldn't be doing that where possible, because you can give a bank guarantee and you can give retention. So if they are asking you for that particular information, I'd get advice in each circumstance, and you really need to look at it in terms of who you're giving that advice to. And just one last thing, if you do give that advice over, you want to make sure that there is some kind of confidentiality agreement with that person to make sure that that information doesn't get sold or given to another party.
That's absolutely brilliant advice, Michelle, and just want to really echo that, because we've had plenty of clients that have been asked to provide this, and it's something that's always concerned us, that if a client isn't structured, or if a business isn't structured well enough, you don't want to be effectively handing the builder a shopping list of assets they can go after if something goes wrong. You want to be showing something that's fairly lean from that perspective. The other concern there as well is around profit margins. Obviously, you don't want to be showing anything where the business is looking so strained that you're somebody that's easy to send broke, and you don't want to go in showing something that's so meaty that they're going to come back to you and request that if something does go wrong, that you're advised for pricing down, because they believe that you're making more money on projects than they are. That is a minefield. So totally back what you say there around best case scenarios. Don't give it to them at all.
Absolutely, yeah, definitely try and hold your cards close to your chest, and you'd really need to look at the circumstances surrounding why they need to know that information, because it's very rare that they should actually need that.
Okay, well, thank you so much, Michelle. Really appreciate your time, and I'm sure I'm speaking on behalf of everyone on the call when I say this has been fascinating and we've learnt a lot. We're going away from here sort of feeling a little bit disturbed, but I think it scared us all. But I think that was the idea, and really can't stress enough what you've said about needing a system, and if I can vouch for anything, I've seen the system that you've built and how flawlessly it works for businesses. So just encourage everybody to go and check it out. Reach out and have a chat to Michelle. She's very accommodating and very generous with her time and her expertise. And with that, we'll close off here. And until next time, thank you very much, and we'll see you later.
Perfect. Thank you. Thanks so much for having me.